When I was a music director in my previous career, I remember receiving my pay statement in a sealed envelope every other Friday. But as online portals have replaced physical pay statements, most employees are unaware of their various earnings, deductions, and taxes before arriving at net income. So we need to communicate and inform financial planning clients that comprehensive budgeting starts with gross pay, not the amount that hits their bank accounts on payday. Although countless variables can be considered when reviewing a pay statement, I examined over 40 of these documents across multiple industries to prepare for this video. Let's dive right in. Starting with the basics, the pay statement includes employee and employer information, which may also tell you about the client's formal job position. You may want to look up the employer online to learn more about its mission, culture, and size, to have a deeper discussion about its alignment with the client's unique values and preferences. The pay statement will include the current pay period's begin and end date, helping you determine if the employee is paid weekly, bi-weekly, semi-monthly, or monthly. This will be an essential input when using the pay statement calculator, since the payment frequency can help to determine the year's remaining pay periods. In this example, Steve Sampleton is paid every 2 weeks, meaning there are 26 pay periods per year. And by dividing year to date by the current health plan deductions, we will discover that this pay period number is 19 out of 26, with 7 periods remaining. Paid time off, PTO, is often ignored when reviewing the pay statement, but it can reveal insights into the client's physical and mental health. I often find examples of employees taking less than 1 day off per year, often driven by a culture of hyper-productivity or the desire to cash out future PTO. Whether you discover that a client has taken a lot of time off or not much at all, learn more about their perception of these benefits. You may also transition into a conversation about selecting their group health plan if they have used numerous sick days. Unfortunately, it is very common for families with high deductible health plans to rarely see the doctor because of out-of-pocket expenses, regardless of how serious their illness becomes. Moving to earnings, you will commonly see the regular salary, the number of hours worked multiplied by their hourly pay rate, plus additional compensation from the following variable sources: performance bonus, retention bonus, stock compensation, commissions, overtime, training, orientation, paid time off, severance pay, retroactive pay, taxable fringe benefits, and expense reimbursements. Remember that many of these income sources may be subject to supplemental tax withholding rates, such as the annual incentive bonus seen here. After gross pay is calculated, various employee-paid benefits are deducted, either as pre-tax or after-tax deductions. It is important to remember that pre-tax deductions on the pay statement do not show up on the client's tax returns, since they are already excluded from taxable income on Form W-2 and cannot be further deducted on the tax return, so no double dipping. Pre-tax deductions will often include contributions to mandatory or elective retirement plans, and we'll notice that traditional employee contributions will avoid income tax but are still subject to payroll taxes. Many employers offer what's called a Section 125 cafeteria plan, allowing employees to receive and pay for certain group benefits on a pre-tax basis. Like walking through a cafeteria line, they can pick and choose from various benefit options. An important note to consider is the shared healthcare costs, with combined premiums often exceeding $10,000. The total cost of employer-sponsored health coverage is shown on Form W-2 in Box 12 with code DD, which can help us estimate future COBRA costs. More to come about that as we review Form W-2. If enrolled in an HSA-eligible high-deductible health plan, HDHP, both the employee and employer may contribute to that HSA. Along with other cafeteria plan benefits, these contributions are excluded from income taxes and payroll taxes. If contributed through the employer, these contributions cannot be further deducted as adjustments to income on the tax return, since they are already excluded from taxable income. When we review our tax returns, they will still be reported and found on Form 8889. And separate from the health savings account, the employee may contribute to one or many types of flexible spending accounts, whether for healthcare, limited use, or dependent care. I often find dependent care FSA contributions when a family has young children. Over time, you will discover that disability insurance may either fall under pre-tax or after-tax deductions, affecting the future taxation of disability income benefits. The benefit may also show up as imputed income if paid by the employer, but is still taxable to the employee. Moving to after-tax deductions, you will often find supplemental life insurance coverage beyond the employer-paid coverage. The employer-paid cost of coverage above $50,000 is included in taxable income, noted on our statement as imputed income, GTL, standing for group term life insurance. After-tax deductions will also include Roth or other after-tax contributions to workplace retirement plans. Other employer-paid benefits excluded from taxable income may include matching or non-elective retirement plan contributions and shared healthcare costs. Moving to the employee taxes section, you will find federal income tax FIT withholding, which will also appear in Box 2 of the Form W-2. The pay statement will likely include the employee's tax filing status, number of tax allowances, and additional withholding request as a dollar amount. Federal tax withholding changes can be made by submitting a Form W-4, Employee's Withholding Certificate, to their employer. The IRS also has an online calculator to help employees estimate the withholding elections, which I've linked below. Depending on where the client works, you may also find state and city income tax. FICA, standing for Federal Insurance Contributions Act, are mandatory employment taxes that provide benefits for retirees, disabled individuals, and children. Social Security tax will often appear as OASDI, Old Age, Survivors, and Disability Insurance, with gross earnings up to the Social Security wage base, currently $147,000 in the year 2022, subject to a 12.4% tax, split equally between the employer and the employee at 6.2% each. The wages and taxes for Social Security will show up on Form W-2 in boxes 3 and 4. Earnings are also subject to a 2.9% Medicare tax, again split between the employer and employee at 1.45% each. A 0.9% additional Medicare tax is also imposed on earnings above certain thresholds. Some pay statements may also include mandatory taxes for state short-term disability insurance, SDI, long-term care insurance, LTC, and paid family leave, PFL, wage replacement benefits. After employee deductions and taxes are withheld from gross earnings, employees receive the remaining net income. The bank transfer information is often included at the bottom of the pay statement, which should be cross-checked for the accounts that you are reviewing. Net income can also be split between multiple checking and savings accounts for various savings objectives, such as emergency funds, upcoming travel expenses, self-escrow, holiday funds, etc. This can be a helpful way to create forced savings and give every dollar a job. If we don't tell our money what to do, it'll tell us what to do. To fully understand the pay statement, we must also review the Employee Benefits Handbook, which I will share in a follow-up video. This will include reviewing group insurance details, employer-sponsored retirement plans, and other benefits that may have been waived or excluded from the pay statement. To truly understand a client's employment, we need to review the pay statement, the tax returns and forms, the employee benefits handbooks, and the summary plan descriptions.